All right, let's go ahead and get started. So I'm gonna go through JP Morgan really quick after I do the SPY. So this is what I have been seeing on the SPY. So I went to the daily just because if we zoom out to the weekly, it can be a little more confusing because there's different highs and different lows within the weekly. So in the daily chart, this is what we have. We have a complete Elliott wave, 1, 2, 3, 4, 5, followed by a complete correction, ABC, followed by another Elliott wave, 1, 2, 3, 4, 5, and then a correction, ABC. So if we continue with Elliott wave theory, we'll have something like 1, 2, 3. Hopefully that's not the bottom. Otherwise, it wouldn't be a complete wave. You technically it could be, but it most likely isn't. I would expect oh, now it's starting to just go everywhere. I would expect um this next wave to end somewhere within the zone again and break the lows, but kind of close down right around this area. And if we go to the hourly on the SPY, we can just see that it's doing literally the exact same thing that happened on Friday. The exact same pattern. Like, look at that. That's just obnoxious. And look, we're looking at topping out again. It's just the market is very strange sometimes and very frustrating. I don't understand it sometimes. It's not my goal to understand it. It's my goal to predict it. Anyway, so let me show y'all something that's very interesting to me. So on average, when you take these huge moves down, let's say like, let me expand this a little more. So if we were to go to this whole move down, if we were to take a Fibonacci or a Gann retracement and extend it, you can see that we usually top out near that 50% mark, which is right here. Like you can see that we top out around 50%, but after a complete wave down, we retest that 50% mark. And you can apply this to the whole market for the last few months. I mean, even today, like look at this. So we'll go to the last high, to the drop, and extend it. Look, notice how it topped out at that 50% mark. So it's not nothing new, but it's just keep that in mind when we go look at JPM. Now let's look at JPM. If you look, this is what happened. It dropped, didn't even recover to 20 or the 50% mark. I mean, it just got hammered at the 25% mark. And JP Morgan has been extremely weak ever since the top back in, I think the top is back in November, yeah. So it has been extremely weak. Now, these three blue bars that I have, vertical blue bars, are time factors that I expect to make a move within the market. And we have this huge range. This huge range is very interesting to me because I did this July 6th one came from doing the math on the daily, and this July 15th came from the weekly. Weeklies are tend to be more reliable than the daily chart is. But what is interesting to me is the Fed minutes get released tomorrow, and we have a supposed time factor tomorrow as well. Now, does that mean that we've been going down, so does that mean we're gonna shoot right back up? No, it just means that we need to be on the lookout for the next 3 days for a new move down or move higher. And you can kind of tell because if we zoom in, look, so we've got a high right here. We've got a low. We got a lower high at this green candle right there. And then we've got a break of that low with a lower high. So this whole thing right here, this area, is what I call a price high. Just because it popped up doesn't really mean anything to me. It is being a little booger. But I mean, that's to be expected when you go to breach new lows. And you can see that every time, like, look, we breach a new low, look how it's just hanging around. We go breach a new low right here, look how it just kind of hung around right there. It happens all the time. Now, if we go in, if I want to zoom in on the hourly, because I get my price entry, or not, my trade entries based off the hourly chart. This is what happened. We just plummeted below, and if we look, this is our support level right about here. Is our support level that I was watching, and as soon as it dropped, I was expecting, kind of come down a little bit, then retest it. Nope, didn't happen. So I got us in right around here, around I'll say average price was like 1990, 109.90. And, of course it happens. You get in as soon as you get in, it just reverses. Everybody loves that when that happens. It's a blast. But what I was seeing is here's the hourly. If you look, we rallied into this low right here. And let me go ahead and get this out of the way. It's confusing. And this. We rallied into this low right here, which could be this whole area could be a supply zone at this point because that used to be a big base for a bottom to form, and now that we've broken below it, old support becomes new resistance. These were the levels that I was watching: 116, 111, 106, and these are my profit targets as we're going along. These little blue lines. They also are different support levels, which is why I have them listed. My main profit target is around 105.90 to 106. That's the main goal. And this is our exit. Is this price high? No, it's not. Where is it? Give me my daily chart. So the price high that I was looking at is right here. Now, of course, a lot of the times when things go to retrace or retest, they go back up into the high. So like all this choppiness, it will go back into the high. Um, I will leave it up to you guys. I will tell y'all when it hits that level, if it hits that level, and you guys can exit. However, the best bet is going to be this high right here, around 119. That is going to be the safest stop loss so that we're not just taking out immediately, because that stop loss coincides with a huge demand or supply zone. But again, that's up to you guys how much you guys want to risk. My risk management allows for me to wait it out to this price high. Um, but let me go ahead and draw this down so you can see it more visually. It's going to have a hard time. You can see how all those bars were supported there. It's going to have a hard time breaking this high, which is why I decided to use this high as our stop loss. But let's say in the event that it does break this high, what does that mean? So if it breaks this high, my automatic guess is that it's retesting these highs. It has to. I mean, unless it wants to go short at 116, something like that. However, what would happen is the way that the price is moving, along with the volume of sales and everything, we would start to be getting a bullish divergence in the bull support zone, which means that we could potentially go back to retest these levels right here, like this whole zone, which would be those highs, which gives us the amount that we risked on the downside or lost on the downside. We can play that to the upside and make the same amount of money back. Obviously, a more aggressive strategy considering the trend is completely down, but that is an option. Also, if we go to the weekly chart on the SPY, we can see that we're getting. Let me go ahead and add an indicator. We can see that we are getting a. Goodness gracious, that's small. We're getting a double bottom right here. We got a double bottom off the bear support zone, and now, we were about to get a bullish divergence, but actually, you can say we are. So we have this low right here. This low right here is obviously higher than this low, but this low right here, the value of it is on the RSI 30.28. And if we go to this low, the value of this low is also 30.28. So that's a double bottom. This low should definitely have been lower, but do we want to take a bullish divergence in a bear market? No, but it's also just another thing. Is like, hey, maybe you don't want to get as aggressive as usual, because you'll get bullish divergences all the time. We had some at the beginning of the downtrend, everything. Because obviously, you know, this right here was higher than the other. Well, I don't need to explain it anymore. Y'all are gonna get confused. I don't want to get anybody confused. Needless to say, we don't want to go too aggressive. This trade is different because the JP Morgan does not necessarily move along with the SPY. Financials kind of do their own thing. And when I see financials start to panic, I only can imagine that that means the same thing with the SPY, and that'll follow suit. So, hence the reason we got a little aggressive today with JP Morgan. JP Morgan has been a very easy one for me to trade. Of course, I may eat my words on that. You hate to see it, but out of the last 7 trades that we've taken, they've all been winners. So one loser. Of course, it hurts my win ratio, but it is what it is. But yeah, so again, stop loss will be above this high. So our high is 114.42. That is the stop loss, the idea of our stop loss for this trade. But our target is about 106 to 105. So yeah, there's your update on that. That's what I'm seeing. I'm not really concerned about it yet until we start breaking into the support zone. Then I'll start watching a little more closely.